We have a few questions that have come in. The first is about 8300, for the Form 8300. And the specific question is, does $10,000 limit apply to each bank account and bank? But I suspect the question is, how do you determine what $10,000 is for the purpose of reporting?
It really is anything 10,000 or above. Your bank itself has that obligation to be filing the forms, and so a lot of time they're going to push that onto you to make sure that you're putting it, especially in this space. So the language is 10,000 and above has to be reported. Like I said, to say that you're going to break it into 9,000 and then do another deposit of 1,000. A lot of companies will do that, or a lot of entities will do that. I would just say, for the most part, be very, very careful. I would err to just being compliant. If you've got 10,000, deposit it. Each bank will dictate as far as how they're requiring it. Sometimes if you've got overnight deposits, as far as that you can drop things off, they'll request that the form go with it.
I think we could extend that question to when businesses have a requirement to file them. So when a cannabis business is doing business with another cannabis business, let's say you're buying, 10 pounds of flower, and you get paid, the seller gets paid, $17,000 in cash for their flower. When does another cannabis business have that requirement?
So the requirement itself isn't related to the marijuana space. It isn't, but it's more because of what was traditionally, in the space, and the illegal nature of it, and money laundering. That in itself is what's created that requirement for the bank reporting, where it's being flagged if it's 10,000 and above. So they're not targeting cannabis companies, and we're the only ones that are having to do this.
One of the other questions we've asked is how 280E applies differently to cultivation as opposed to retail, as opposed to processing. And can you speak to that in particular, about how it relates to cost of goods sold, and which has some more advantages and disadvantages?
Yeah, absolutely. So, like I said, my best advice is, assuming if you are around the marijuana, whether it's cultivation, whether it's processing, whether it's dispensary selling, assume 280E applies to you. By creating different entities to spin it off, there's not been a lot of success in doing so. Now, what I will say, you get into a gray area. Testing labs are a great kind of example to talk about there. So we've got testing labs that are testing the marijuana product. Now the question is, does 280E apply to them? Well, they've been found to say yes, if their sole purpose and sole clientele is also within the marijuana space. So if that's all they test, testing facilities have to be 280E compliant. If you're dealing with an entity or a lab that's maybe touching and doing some testing for the space, but also provides testing for other types of businesses, they have found that 280E doesn't apply to them. So it really comes down to, at the end of the day, you don't necessarily have to be touching the plant, but if your entity's sole purpose is providing services around the space, it really comes back to get your tax accountants, your lawyers involved before you make the determination that it doesn't apply to you.
And I think maybe the question more specifically is, certain verticals carry the burden of 280E more than others. So, retail has fewer cogs, right? Versus a cultivation facility that might have more cogs, because you have all your inputs, and you have your soil, and you've got lighting, and so I think the question is maybe around parsing out, being careful about parsing out your cogs per each vertical.
Yeah, so at the end of the day, the way I think about it, by the time it gets to retail, it's very clean cut, right? It's the cost of what you're purchasing is what you get to deduct. It's the cost around the inventory and getting it to the store. and then anything else above and beyond is non-deductible. When you get into a grow or cultivation, just think about it this way. The cost that they're able to capitalize ultimately is what's being pushed through as the inventory. So the same rules apply to them, but do they have a lot more accounting and a lot more flexibility? We're definitely looking at a lot more line items when we're doing, say, the grow. Right, because then now the facility, if it's an indoor grow, the facility, the rent, the utilities, the equipment we've purchased in order to do the grow, that all qualifies under 280E because they're all costs directly related to the grow facility. And so it goes into the COGS. But if you think about it, it's those COGS that flow into the inventory that created the cost to the retailer. So it does kind of, you see that flow going through the entities, but it's definitely a lot more record keeping and tracking and a lot more costs that technically qualify when you are doing the actual manufacturing or grow. Does that answer that one?
I think so.
Okay.
Great. Thank you. We have a question about payroll and independent contractors. So can you talk about how that might differ for an independent contractor versus an employee, how you would pay somebody who's just a contractor?
That's really no different than any other industry. We talked about PEOs being used for payroll just to kind of keep a marijuana, entity name from their direct deposits. But it's really no different if it's a 1099. Your same considerations on whether they qualify as a 1099 versus employee are the same you would be dealing with in any other industry. What I do find is a lot of them should be okay in accepting cash because you still will have a lot, even cash payrolls. We've even done cash payrolls. They need to be okay in accepting cash versus maybe a check or definitely not an ACH. But
So we have a question here about what is the best way to set up a business in terms of saving money on taxes. And I suspect your answer to that is to talk to your tax professional about your specific circumstance.
you're absolutely right.
That's what I thought. There's a question about whether or not there's a sales tax on marijuana in Arizona.
Yeah, so that's what we kind of just really briefly touched on. Definitely the dispensary level, you will be taxing your clientele. There's different taxes associated with the marijuana industry, but it's done just as any other industry where you're going to be filing your TPT or transaction privilege tax. Like I said, that's what Arizona calls their sales and use tax, is their TPT. So it's no different than anything else that is applicable to sales tax. You will be collecting, and there are specific rates when you're dealing with your medicinal versus rec.
The final question is, does 280E apply to CBD products?
That's a great question.
Well, CBD is federally hemp, and hemp,
I
as
would
long
think
as it is qualify under legal
I think it'd
definition
be
of hemp,
excluded. Yeah.
CBD is not a federally controlled substance.
Yeah, I would agree with that. That's a great question. We rarely deal with a lot of entities just touching the CBD versus the THC products. But yeah, I don't think it would fall under the definition of the controlled, was it the substance one?